In this video, I'm going to share with you the only moving average strategy that you need to know. I've been trading stocks and options for over 20 years, and this is the one I'm currently using. I know some of you are skeptical out there. You say, Randy, moving averages don't work. Well, I say, give me a chance. Let me show you what's taken me 20 years to learn. And at the end of this video, you can tell me if you think moving averages work or don't work. One of the challenges of moving averages is that they can be complicated. I mean, a simple line on a graph, now that's not complicated. There's so many different types of settings and variations and techniques that it can literally just be overwhelming and your brain can't handle all the information. But in this video, which is my tradition, I'm gonna keep it simple. I think it was Albert Einstein that once said, basically, and I've rephrased this for my own benefit, he said, simplicity is genius. Now, I'm not saying I'm a genius because I know I'm not a genius, but we'll see, I've spent 20 years trying to figure out how to use moving averages to my benefit when it comes to trading. And it wasn't until I simplified the process of using moving averages that I began to see consistent success in my trading. By focusing on the moving average strategy I'm going to share in this video, I increased my profit and also my win rate. But before I get started, let me know right now, what are you thinking about moving averages? Do you use them? Do you like them? Or do you hate them and you think they're worthless? If you need to, go ahead and hit pause and just type in the comment section what you think about moving averages. And don't worry, if you change your mind by the end of this video, you can always go back and edit that comment and no one will ever know. It'll just be our little secret. All right, let's get started. In this video, I'm going to share with you 3 things when it comes to moving averages. The first one is how I use moving averages to pick my entry spots. The second one is the exact moving average settings I use every single day. And the third one is how I handle situations where different time frames or different moving averages on different time frames conflict with each other. So if you've ever felt lost or overwhelmed when it comes to using moving averages, my goal is to make that go away, to make that disappear by the end of this video. The first part we're going to talk about is how to use moving averages to determine direction and trend of the stock you're looking to trade in. First, let me tell you the 4 different time frames I like to use when I'm trading stocks and options. Those time frames are the 15-minute time frame, the 60-minute or hourly, also the daily, and finally the weekly. I'm going to talk through these different time frames in the order I use them in when I'm looking to enter a new trade. So for me, it all starts with the daily time frame. And here you see a daily chart of CME. This little yellow arrow here, this is actually a trade I'm going to share with you later in the video. So I entered this trade on the day that the arrow is pointing up, and I exited on the day that this arrow is pointing down. But we'll get to that trade a little bit later. Here's the process I went through before I did this trade in CME. So for me, it all starts with a daily time frame. So looking at our daily chart here, as you see here, the little D up top here. And the question I would ask myself if I was only using moving averages to determine entry and exit would be, is CME trading above that green 50 moving average if I'm taking a bullish trade? And that was the type of trade I was doing here, a bullish trade. So I see here that it is trading above both the green 50 and red 200 moving average on this daily chart. Then I switch over to the weekly chart. I ask myself the same thing. Is it trading above the green 50 and red 200 moving average? And the answer again is yes. So that's looking good. Overall, the direction of the trend of CME appears to be up in both of these time frames. Now, of course, there are ups and downs in these candlesticks, in this case weekly, and here we see daily. So there are ups and downs. Remember, I like to compare stock charts like waves in the ocean. They go up and down. They go up and they go down. But the question is the tide coming in, or overall is the water getting higher, or is the tide going out, or the water's getting lower? But as you see here on this daily chart, overall the tide was coming in. The water was getting higher, or CME was in a nice uptrend. We could tell that because it was mostly trading above this green 50 moving average. It was also trading well above this red exponential moving average on this daily time frame. So that's 2 time frames I check, the daily and the weekly. I then look at the hourly. What's going on in the hourly? So now I've switched this chart to the hourly chart of CME. Remember this yellow up arrow? It's when I entered this trade. What was CME doing on this hourly chart? Was it in an uptrend or a downtrend? Well, as you can see, it was trading above both the green 50 and the red 200 moving average. So again, CME looked bullish. It looked like it was going to head up in the near future. And usually just to finish things off, I like to check the 15-minute time frame chart. And here you see that even on that 15-minute time frame, CME was trading above both the green 50 and red 200 exponential moving average on this 15-minute time frame. So really, this is one of those rare situations where everything lined up. Every time frame was telling me that CME was in a bullish uptrend. So my direction and trend all pointed up. Like a rocket, we were cleared for takeoff. But let's say our rocket wasn't quite so cleared for takeoff. Or in other words, let's just say that some of these time frames conflicted. Would I just not do the trade, or how would I handle that situation? Well, personally, I like to lean more on those longer time frame charts. So let's say, for example, the 15-minute and maybe the hourly chart showed that CME was in a decline or was in a downtrend. Well, if the daily and weekly charts both said that it was in a bullish uptrend, I would lean more on those. You're trying to use the time frame that most traders are using. And I believe that most traders, or the majority of traders, they're going to look at daily and weekly charts over hourly and 15-minute charts. So I'm okay not having all of my time frames lined up in a perfect bullish trend if I'm taking a bullish trade, or bearish trend if I'm taking a bearish trade. If my longer time frame charts are confirming that I'm in a bullish trend, I'm okay taking that bullish trade. Now I will tell you, I don't just use moving averages in my trading. I use things like support and resistance. But we're only going to focus on moving averages in this video because we're going to keep it simple for you. But simply put, if the time frames conflict, I'll lean more on those longer time frames. All right, let's now move on to part 2 of this 3-part video. How can we use moving averages to determine the strength of the trend? I mean, we all want to be strong, right? So how strong is our trend? How do we use moving averages to determine how strong those trends are? Let's go back to our charts. Let me show you how you can use exponential moving averages to determine how strong your trends are. Or as the Spanish say, fuerte. Sorry, I'm kind of cracking myself up here. Okay, so how fuerte, how strong is the trend here? This is one reason why I like using moving averages, because it's very easy to see how strong this trend is. You might be saying, how do you do that, Randy? Well, simply look at how the 50 and 200 moving averages are reacting around each other. If the 50 moving average is trading above the red 200 moving average here, then I know I'm in a pretty strong uptrend. In fact, because this green 50 moving average is trading above this red 200 moving average, that tells me that the recent trend is nice and strong. We are clearly heading up. On the other hand, if you look back here where the green 50 moving average was below the red 200 moving average, that tells us that the trend was down. So the trend was weak. But once it switched back over, we're now in a bullish trend. As you see, the trend I'm going to share with you, we entered it right up in here. So we're clearly in a nice bullish uptrend, and it was a strong bullish uptrend. So if the green 50 moving average is trading above the red 200 moving average, and the stock is trading above both those moving averages, that's a nice strong uptrend. And the opposite would be the case if it was a downtrend. This helps us to avoid some of those choppy markets that you might find yourself in. For example, here you see kind of a choppy market. Yes, the green 50 moving average is trading above the red 200 moving average, but the stock is trading in between those moving averages. Now, there are good ways to trade choppy markets, and I actually like a choppy market for some of my trading strategies. But overall, if you're looking for a nice, strong uptrend, well, this isn't it. You want the 50 moving average to be above the red 200 moving average, and you want the stock to be trading above that green 50 moving average or that shorter time frame moving average. By doing trades when your charts look like this, it improves the odds, the probability you're going to win a bullish or neutral trade. Now, a pro tip here. Some traders like to use support and resistance along with moving averages to pick their trades. And I'm going to tell you, I'm one of those traders. So if you'd like a little more help with support and resistance, I have a whole video series dedicated to technical analysis where I talk about support and resistance. So just keep that in mind. Learn moving averages, but once you have those down, maybe consider learning some things like support and resistance. That'll increase the odds of you winning your trades even more than just using moving averages. All right, now let's move on to our third and final part of this video, which is how to use these moving averages to enter positions. So let's talk about pullback entry points. What a fun group of words. I'm going to talk through this using my real trade that I'll show you the results of in just a minute. Now, these pullback entry points, this is where, in my opinion, moving averages, well, they really shine. You can see how well they work. Now remember, no technical analysis tool works 100% of the time. That just doesn't happen. But if it gives you an edge or an advantage most of the time, well, it's one I think you should consider. So once I know we're in an uptrend, I know the trend is strong, it's fuerte, well, then I'm looking at when is the best time to enter a bullish or neutral trade in the stock. For me, it's when I see the stock pull back to around those moving averages. In this case, the green 50 moving average on this daily chart. You see, entering at these pullbacks, it allows you to enter the stock when it's not too far away from the moving average, or it's not at a spot where it's likely to come back down or to come lower in price. In other words, you're buying around where you expect the bottom to be, because that's around the area where a lot of other traders expect the bottom to be, so they're going to be buying also. So simply put, I'm looking for the market to come down and test this area for support or get close to the green 50 moving average. Now, if it breaks below there, it kind of null and voids this trade. And that's the case if you're only using moving averages, which is what this video is about. As you see here, CME had multiple times over the previous months used this moving average as support. Well, the data into this trade, which was November 26th, it had recently come down, been close to that moving average, and appeared to be about to take off. So I entered the trade on this day here. But I didn't just look at this daily chart. I wanted some confirmation. To get that, I looked at the hourly chart as you see here. And again, I saw that it had come down, been testing and finding support around that green 50 moving average, and the two previous bars appeared to be taking off like a rocket ship. So this is the bar we entered the trade at right here. And just for one more confirmation, I looked at the 15-minute chart. And again, I saw the same thing. This is approximately the bar where I entered this bullish trade in CME. So as you can see, it had found support around that green 50 moving average, even on this 50-minute chart, and again, appeared to be taking off like a rocket. I liked what I saw on almost every time frame. I gotta tell you, this is somewhat rare. But if you get most of your time frames lined up, then it's a trade I generally will take. Now you can combine this with a couple of things I'm going to briefly point out to you here. I know I said this video is about moving averages, and it is, but I can't help but share an extra little tip with you. I like giving you guys these extra tips. So if you see the stock finding support around those moving averages and taking off, you see volume increasing with these nice green or up volume bars, well, that's a sign this trade it has a high probability of winning. Now, any questions about any of this, please ask me down in the comment section below. I'm happy to answer any questions. But now let's get to the actual trade that I did. All right, so here's my trade. On November 26th, I sold to open the CME January 17th 220 cash secure put option, and I got $2.91 per share. Remember, I felt comfortable doing this because all those time frames, all those moving averages, they all looked bullish. I felt like I was lining myself up to win. Now, of course, nothing is guaranteed. Even if you have all the technical analysis tools lined up in your favor, you still won't win all of them. But I feel like my odds were very high that I was going to win. So what happened? Well, fast forward a little over a month later, and I was able to close this position out early. As you see here on January 2nd, I bought to close the CME January 17th 220 put option for only 35 cents per share. The expiration date of this option was January 17th, so I closed it out a little over 2 weeks early. I told you this video was only 3 parts, but I always like to give you a bonus. So I'm going to share a bonus section with you in just a second. Before I get to that bonus tip, just keep in mind the reason why this trade worked out so well is because I had all my moving averages lined up in my favor. The 15-minute, the 60-minute, the daily, and the weekly charts all confirmed with their moving averages that I was set up for a winning trade if I was bullish or neutral. Here you see the time frame I was in this position. I entered on this yellow up arrow day, and I exit on this yellow down arrow day. During this whole time frame, CME stayed above these moving averages. And the result was a really nice, easy win for us. I like easy wins. I think you probably do also. So what's this whole bonus tip that I mentioned to you? Moving averages can greatly increase the odds of you winning your trades if used properly. However, you won't win them all. I know, I've tried to win them all. You can't. But what you can do is handle those positions that go against you in a better way. Because of that, even if everything is looking great like this one did, like the whole trade's gonna go my way the whole time, I still plan that's gonna be a complete disaster. That's gonna go against me. Now, I'm not a pessimist. I think I define myself as a realist, but I do want to be prepared for when things go against me. I was never a Boy Scout, but I learned from the Boy Scouts. You always want to be prepared. So how can you be prepared for a trade that doesn't go your way? Well, always have a plan in place for when things go wrong, because they will. So how do you know when things have gone wrong? Well, you can use these same moving averages to help you determine that in a pretty easy way. For example, one of my bullish theses of this trade have been wrong using moving averages. Now, I don't see anything wrong here. It all looks great because we're trading above these moving averages. But let me slide this guy over just a couple more days and notice what happens. Now you see a little uh-oh here. Here on this daily chart, we see this candlestick broke below this green 50 moving average. That's a little bit of an uh-oh. That might be a signal that it's time to do something with this position, whether close it out for a loss if it came to that, or just have a backup plan, adjust the trade. Now, we were out of this trade on this day here, but if we had been in this trade, we still probably would have been okay because we had sold the 220 put, which is down here. So CME was still over $5 away from our strike price. But this right here, where it broke below the green 50 moving average on this daily chart, that may have been your signal that it's time to do something. Do something might have meant closing it out for a profit if you had a profit, or do something might have meant to roll it out and roll it down if you're willing to stay with the position. Now, personally, I didn't want to stay at the position because this guy right up here, earnings. Earnings were coming up in February, so I wanted to be out of this position if at all possible through earnings. But if earnings hadn't been coming up and I felt uncomfortable here and I wanted to stick with the position, well, I might just roll this strike price down, say to 215 or 210 as I rolled it out in time. So you can use these moving averages to not only tell you when to enter trades, but also tell you when it's time to manage your risk or do something about it. That's why I like moving averages. They give you a nice, clear, easy way to enter trades and also to know when to adjust or to exit trades. So now what do you think about moving averages? At the beginning of this video, I asked you to comment whether you like them or you thought they were worthless. So if you want to change your answer, hey, nobody's looking over your shoulder. Please go ahead and pause the video, change your answer. Or if you didn't write an answer, please go ahead in the comment section below. Let me know, do you like moving averages? Do you want to use them? Or are you currently using them? Or do you still think they're worthless? Let me know what you think. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. Earlier in this video, I mentioned support and resistance. If you'd like to see how I use support and resistance to greatly improve the odds of winning my stock and option trades, check out the video at the link above and the description below entitled The Power of Support and Resistance. Until next time, happy investing, and we'll see you again soon.